Good morning, everyone. Welcome to Wednesday morning. It's Stephen Whiteside here from the uptrend.com. In the pre-market this morning, stock index futures and commodities are currently trading lower, but we do have CPI numbers coming out at 8:30 this morning, and they could certainly change the direction of the market. Now, the VIX had an inside day on Tuesday, looking for a close on Wednesday above 1746, and that would certainly be bearish for the market. The US dollar index has been trading in the channel the past couple of days, so no trend there. We're looking for the US dollar index to continue lower and other currencies like the euro and the Canadian dollar to continue to move higher. Now, looking at the bond market, this isn't good. The bond market pulled back in the channel yesterday. Bond yields were up. And depending on how the market reacts to the inflation numbers, if that continues, that's not going to be good for the stock market. Now, the price of gold made a new all-time high yesterday before pulling back. It's trading lower in the pre-market this morning. Silver actually traded through the lower channel line yesterday before recovering, still closing lower on the day. So silver not in sync with the price of gold at the moment. There's Canadian gold stocks pulling back 1.72%. In the U.S., they pulled back 1.24%, so no major change there. Now, the price of crude oil was up yesterday. It's down in the pre-market this morning, and not enough to take out yesterday's low just yet. And there's natural gas continuing to move higher on Tuesday. Canadian energy stocks were up 1.37%. U.S. energy stocks were up 0.81% on the day. Now, we didn't see a lot of movement in Tuesday's trading action. The iShares for the TSX 60 ended up 4 cents on the day. The Vanguard Canada ETF was down 3 cents on the day. We've got the Dow Diamonds trading in the channel once again, so not trending at the moment, but still on a buy signal. The SPY was up 46 cents on the day, no change there. The equal weighted was up 2 cents on the day. Again, we're on a buy signal here, but not trending at the moment. That can also be said for the NASDAQ 100, down a tick under 0.25%. Small pullback in the equal weighted NASDAQ, and we saw the next generation NASDAQ trade down to the lower channel line, as did the iShares for the Russell 2000. We've got small caps back on a sell signal, micro caps trading lower on Tuesday. So no trend changes there, but obviously not looking very strong at the moment. Now, one of the big round numbers we haven't talked about in a while is the 20,000 level on the NASDAQ Composite Index. We talked about it back in November as we were heading up to it in early December. We traded slightly above it for a couple of days and then started to pull back. In January, we took another run at that high and failed at the 20,000 level once again. And in a week or two later, a week later, we actually came up and filled the open gap and then pulled back from there. So that's a major high, lower high. Then we're continue to make lower highs here. So that could turn out to be bearish over time. If you're bullish, you're going to look at this low and say, hey, we put in some higher lows here. So that's bullish. So there's an argument on both sides here. I'm still looking at that big round number of 20,000. If the market can take it out and take out the December high, then you can see our next price target to the upside. But so far in 2025, we have not been able to do that. Let's finish off this morning's presentation looking at the Magnificent Nine, starting with the ETF. It is on a sell signal right now and is just moving sideways at the moment. Much like the NASDAQ Composite Index, we peaked back in December and now we've made a series of lower highs. We haven't taken out the January low yet, and that will certainly be a tell if we start breaking down below the 53.13 level. You can see on the midterm chart where momentum peaked, and we've been just sliding off ever since. And we are still holding the 50-day moving average. We're sitting right on it at the moment, and you can see where the 100 and the 200-day moving averages are below. And of course, if we start breaking down below the 100-day moving average, that would take us down through the bottom of the flypaper channel. Now, Apple traded up yesterday. It traded above the upper channel line, but did not hold that high. We're looking for a close on Wednesday above $234.53. Amazon is on a sell signal right now. It had an inside day of an inside day on Tuesday. Broadcom still on a buy signal here, still struggling to break out above 234.38. If we can do that, then we could retest the previous high up at the 250 level. Then no joy for Alphabet at the moment, and we're stuck to the 187.50 level. You can see our next target below and a nice big open gap over there on the left. Then Meta still holding up here, still at the top of the panic zone, still stuck at the 718.75 level. If we can break out above the recent high from 3 days ago, then 750 does come into play. Looking at Microsoft heading in the other direction, note that we made a significant low back here in late October, and we're going to look to see if the market can hold that low. But it looks like the Microsoft traders want to retest that in the not so distant future. Now, we talked about NVIDIA. It is back on a buy signal. It is trading from underneath the flypaper channel, so it's going to be a struggle here to continue higher. And the pros gave up control yesterday, and the public is back in control of the trading action of NVIDIA at this time. Now, Shopify had a roller coaster day on Tuesday, trading down to the lower channel line before heading up and closing near the high of the day, which is a new all-time high up at the 125 level. You can see we're at the top of our projected trading range on this chart, but it's easy enough to do the math and to see that our next target is 137.50 in New York. In Toronto, we're stuck at 175. If we can start to break away from that, then 187.50 and possibly $200 would come into play. And you can see we traded down the lower channel line yesterday. So a close below yesterday's low would give us a sell signal if we have another wild day like we had on Tuesday. And then last up, we're looking at Tesla. Tesla's having a hard time at the moment. Yesterday was not a good day for Tesla as it broke through the 100-day moving average, heading towards the 200-day moving average down there at the $300 level, which of course could be psychological support. We are starting to break down below the flypaper channel. We haven't broken away from it just yet. We're getting pretty close to filling the open gap from over here, which is at 324.68. Below that is 312.50 and then 281.25. Those are our mathematical targets. Of course, the 200-day moving average is at the $300 level, which is where psychological support would kick in. You always expect big round numbers to act as support and resistance. And below that, we've got two nice open gaps that could certainly be attractive to Tesla traders if the stock's going to continue to move lower from here. Okay, folks, that's all for this morning's presentation. It's all about CPI numbers on Wednesday. If you're in the commodity market, of course, we get energy inventories later in the day, and that could certainly change the direction and sentiment in the energy sector. Have a great day. Next time you'll hear my voice is on Thursday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.